Hello friends, this is Sandesh again. Today again we'll be covering certain basic terminologies used in the accounting domain. The first such terminology is debtor. Now, debtor is a person whom the business has to collect some money from. Let's say for example, there is a college and a student got admitted into a particular college. The college fees was, let's say, per year 30,000. The college told the students pay after 1 month. Now the college needs to recover the money from the student. So in the accounting books of college, this 30,000 receivable from the student will be shown as a debtor. Second component is creditor. Now creditor is the opposite of the debtor. Creditor means the business needs to pay the money to somebody. Let's take the same college example. The college fees which the student had to pay was 30,000. Now, did the student pay that right away? No, he's paying that after 2 months. So, if you are doing accounting from the student's perspective, he has to pay 20,000 or 30,000 to the college. Hence, college will be shown as a creditor. Next concept that we're going to look at is goods. Goods are nothing but the articles, products or commodity which the business deals in. Let's say there is a furniture dealer. His business is to procure the furniture and sell the furniture. So for that furniture dealer, furnitures like sofa set, dining set, chairs, all this will be considered as a goods. Now let's take another example. Let's say there is a stationery dealer. The stationery dealer deals in pen, pencil, books, etc. Now these pen, pencil, books, etc. will be considered as goods for the stationery dealer. Next terminology is purchases. Purchases means the goods bought by the business. Now purchases can be made on a cash basis or on a credit basis. The goods could be purchased for the purpose of sale or for the purpose of further production. Next component is sales. Sales means the goods sold by the business to another person. Now similar to purchase, sales also can be made on a cash basis or on a credit basis. Next one is the stock. Stock is nothing but the unsold goods which the business has with itself. Let's say there is a dealer who purchases the rice and sells the rice. He purchased about 100 kgs of rice for himself. He sold about 70 kgs of rice. So how much is remaining with him? About 30 kgs, right? That 30 kgs is what we refer to as stock. Next component is expenditure. Now every business to run successfully, there will be a certain cost which the business has to take. That cost could be in the form of salary paid to employees, building rent, electricity charges, etc. etc. All these costs related to the business are known as expenditure. Next one is the revenue. Revenue means the goods sold by the business on which money or money's worth is receivable. So whenever a business sells the goods, we refer to that as a revenue. Other income. Normally business can generate some of its income not only through revenue but also through other sources. Let's say there is a furniture dealer. He had purchased a lottery ticket and he won a lottery of about 10 lakh rupees. Now this lottery income which he received for 10 lakh rupees is what we refer to as other income. That is something which is not related to his furniture business. Next is the total income. Total income means the revenue plus the other income. If you add revenue plus other income, the number that what you get is what we call it as total income. Next point is the profit. If the total income is greater than total expenditure, then we call that as a profit. Let's say for example, the total income is 5 lakh rupees and total expenditure is 4 lakh rupees. So the difference of 5 and 4, which is 1 lakh, is what we refer to as profit. Next terminology is loss. If the total income is lesser than the total expenditure, we call that number as a loss. Let's say, for example, total income is 3 lakh and total expenditure is 5 lakh. So the differential amount of 2 lakhs is what we refer to as loss. Hopefully this video was helpful to you. Thanks for watching.